Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my medium time frame bullish scenario where we're looking at a finished wave 1 or A, finish 2 or B for then continuation to the upside in a wave 3 or a wave C. The main question we then have to answer is this the low over here for then a 1, 2 and working on a 3 to the upside? And in the videos the past 2 weeks I've explained why the probabilities of this being the low after this corrective structure is low at the moment. If this was the low over here for then impulsive structures to the upside, it could work in a nice 3-wave structure. But the fact that this low over here took the low on the left is definitely lowering the probabilities because there's not really any great Elliott Wave scenario that makes this the low of the corrective structure, and therefore the probabilities for the bearish scenario are higher at the moment. But if we zoom in to this structure anyway and look at what's been happening on the lower time frame, we switch to the 1 hour, and then over here we are then looking for a double 1-2 scenario. Wave 1 in green to the upside, 2 in green over here to the downside, and then inside the green wave 3 we are looking for a 5-wave structure to the upside where wave 1 and 2 and then 3, 4, 5 are going to be finished for wave 3 to eventually end as well. Now the most common target for a wave 2 is between the 786 and the 0.5. Now, the 0.5 has already been hit as well as the golden pocket over here, so we still have the 786 left just in case price likes to move towards the downside still. But the biggest problem of this low time frame scenario is written in the box over here. So this blue move to the upside looks very much like a zigzag and counts much better as a zigzag on the lower time frame, which is a 3-wave structure and not a 5-wave structure, because in a wave 1 you want to see an impulsive structure, meaning a 5-wave move, 1, 2, 3, 4, 5. But you can actually clearly see it already on the 1 hour that this is like a 3-wave structure. This over here, this 1 hour like red candle being a wave 4 does not work because it retraced too deep. So it works best that this is a 3-wave structure. Now in some previous videos over the past week I've been talking about potentially a leading diagonal, but really doesn't really make sense. It's just too long in both time and in price, while in a second wave 1 over here, as we are looking for a 1, 2, 1, 2, this second wave 1 is a lower degree wave 1 than the first wave 1, because this is the wave 1 of the green count and this is the wave 1 of the blue count, which is part of the green count, the green 3 over here. So usually you want to see a lower degree count being shorter in time and in price. However, this move to the upside is already longer in time than the first move we got over here for this wave 1, and it looks like a 3-wave structure. Again, the probabilities are not really on its side. If we then look at this wave 2 and at least try to figure out if there's a way to count this in a 3-wave structure for then continuation, because wave 2 has to be a 3-wave move to the downside, then we go to the micro time frame, switch to the 30 over here, where we are then looking for a 3-wave structure to the downside in a WXY. W being a zigzag, X being a complex structure for then a wave Y to the downside. Now in the video yesterday, I was also looking for potentially a double zigzag to the downside, meaning W is a sharp zigzag, then you have a wave X, and then Y being a sharp zigzag as well to the downside. However, for a double zigzag, you want to see this trend line being broken. This is the trend line from the beginning of wave W to the high of B in W, because this is then an A, B, C. So you pull it from here to here. And for this wave X, you prefer to see this trend line being broken. And as you can see, we're not even close. So at the moment, I prefer wave X to still have a higher high, like moving towards the upside before a Y to the downside, because as it stands, putting this over here as the low of, or the high of a wave X, this high, so then you have a W, X, and then this being wave Y to the downside does not make sense to me, because then we are talking about a double zigzag, because then we have a zigzag in W, any correction in X, and then you're going to have a zigzag in a wave Y. However, in this double zigzag, this trend line over here has not been broken, and actually we're very far away from that trend line as well. So that's not really preferred. So then I would still be looking for preferably wave X to not yet be in, and then eventually a wave Y. But then the problem we have is the vertical line on the chart, which already is long, because you can see the number at the bottom is the 2.2 1.236. This is a fib time comparing this move to the upside with the corrective structure that we have at the moment. And remember, this is the blue wave 1 looking for a blue wave 2 for then continuation to the upside in the bullish scenario. Now, most commonly, a wave 2 is not going past the 2 fib time over here. So it's already a long correction. And you can imagine if this is a W, we're still waiting on X and then another Y, is going to be incredibly long, lowering the probability. So from a time point of view, it would be better. This is the low of wave 2, and we are now working on impulsive structures towards the upside beginning a wave 3. But then we have the problem of this being a WXY, which doesn't really make sense as a double zigzag. It's just the structure itself doesn't fit with the wave X not crossing the trend line and stuff. So yeah, there's a couple of complications with this micro bullish scenario, as I've shown just now. If we then zoom out again and we go to the medium time frame bearish scenario, we are looking at this being a finished wave 1 or A, and we are looking for the low of a wave 2 or B over here, where the corrective structure is then an A, B, C zigzag structure. 5-wave move to the downside in wave A, followed by a 3-wave corrective structure in wave B, which was a WXY, W being an expanding flat, X any corrective structure, and then this move to the upside is a zigzag. Very nice indeed, and then a WXY. For now, a move to the downside, looking for that wave C, where the most common target for wave C is between the 1 and the 1.236, taken from the high to the low of A to the high of B, which is between 27.2K and 26.5K. And what is nice about that area is that it has confluence with the blue support boxes that I have over here. Now, probably if you're a regular viewer, you know that these areas are in generally very, very well respected, as we had over here a box as well. Over here on the low time frames, many boxes are being hit, and therefore it's important to at least keep them in mind. This one, the bigger one, is between 26.8K and 27.4K, and the one at the 1.236 over here, the lower blue box, is between 26.2K and 26.5K for some additional support for then a bounce over here after wave C ends and continuation to the upside. If we then zoom into this structure over here and we have a look at how we can make this bearish, we have to think about impulsive structures, because a wave C to the downside is an impulsive move. So we have to look for any structure that looks like an impulse. And currently on the lower time frame, I'm looking at this diagonal over here. Now, this diagonal is then a 5-wave structure to the downside, where each wave is a zigzag structure. It's a leading diagonal, and a leading diagonal can both be a 5, 3, 5, 3, 5 diagonal, where you have an impulse, correction, impulse, correction, impulse. However, a leading diagonal can also be a diagonal where all the waves are 3-wave structures and they're zigzags. We're looking for zigzags. So it's a 5, 3, 5, correction, 5, 3, 5, correction, 5, 3, 5, 1, 2, 3, 4, 5. And that is exactly what I'm looking for over here. So we then have a zigzag in a wave 1, correction in wave 2, zigzag in a wave 3, correction in wave 4, zigzag in a wave 5 to the downside, where I think this support area over here is incredibly interesting, which is between 29K and 29.1K, for then the low over here of a wave 5, therefore the low of this green wave 1. So this is then a wave 1 to the downside, looking for a corrective wave 2 for then a 3 continuation to the downside. Now, in this scenario, what I think is nice as well is that if wave 5 and therefore the green wave 1 can end around this target box, and you take a fib from the high to the low of then the green wave 1, the golden pocket is in perfect confluence with my blue untapped resistance area over here, which is sitting between 29.7K and 29.8K. So that would be incredible, and that's why I drew this line on the chart over here, because I am looking for this particular scenario. I already put it this morning in the silver group as well, the updates section, where I said, I'm looking for this, that if price moves towards the downside, this would be a great bounce, some additional confluences, and also the blue boxes are then being hit. First, we make sure the support is gone because we hit it, then move to the upside into resistance, continue to the downside. Now, wave 4 in a contracting diagonal most commonly ends around the 382 to the 0.5. The golden pocket is less common, so that's something to keep in mind. And also, if we look at the target for a wave 5, then this wave 5 is not allowed to be longer than wave 3. So wave 3 is from the high of 2 to the low of 3. So meaning this wave 5 is not allowed to be longer in price. So the 1-to-1 as it stands now, with this being the high that I took, is the invalidation. Trend-based fib from the high of 2 to the low of 3 to the current high of 4. Then the invalidation over here is sitting at 28.9k. If price would move towards the upside for a wave 4 going a bit higher to the 0.5 or maybe even the golden pocket, then you will see that also the 1-to-1 is going to shift to the upside and maybe even inside the blue box. So preferably this potential wave 4 is not going to go to the golden pocket over here, because if it does, then the invalidation of a wave 5 is going to be inside in the middle of the blue support box over here, which wouldn't be that nice. So preferably we're going to stay below the 0.5 or around the 0.5 max for this wave 4. Finally, you also see a channel. The channel is taken from the low of 1 to the low of 3 to the high of 2, because we're looking for a diagonal structure, and therefore you want to see a contracting line from the high of 2 to the low of 4. If 4 is going too high and hits the upper trend line of the channel, then a diagonal is a contracting diagonal is invalidated, and an expanding diagonal is very rare. So the moment the trend line here is hit, I'd be looking at already a finished diagonal for then a 3-wave move towards the upside. So then we have a finished structure. Then this over here, the green wave 1, is going to move to the left, and then we're going to be looking for a wave 2. But as it stands now, we didn't yet hit it, and also I'm looking for zigzag structure. So this is then 1, 2, 3, looking for a finished 4 eventually, and then a 5 to the downside in this particular scenario. So that is important. You don't want to see this trend line over here being hit. Now the invalidation again is this low over here, and we're going to be looking for an impulse to the downside. If we look at the CVD divergences, then throughout this whole move to the downside, we have seen bearish CVD divergences. Over here, I've drawn it on the chart. Look at this, red line to the downside, lower highs, lower highs, lower highs, but look at the yellow CVD, higher, 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 consistently. So that is something we have to keep in mind. Doesn't look too bullish to eventually take this high, right? In a more bullish scenario where you're looking for a wave 1, 2, and continuation in 3, preferably you would like to see bullish CVD divergences with this low over here, but these are absolutely non-existent. So if we look on the lower time frame here on the 15-minute, then locally we do have some bearish CVD divergences. Over here, lower high in price, now this low, but if price in a 3-wave structure, right, makes a wave 4, because this only for a wave 4 is a bit short. So preferably on the micro bearish scenario, wave 4 is a little bit longer and creates maybe a new high over here. But then still we're going to have bearish CVD divergences with this high over here. So the first more bullish sign, I guess, for a finished diagonal would be to take this high at least, but the invalidation of the diagonal I've just shown you is price taking this high, right, which is quite high at the moment. It's at 29.7k, so that is good to know. And the target for the bearish divergence is then this low. More locally, if we zoom in, it's a little bit of a mix. We had a double bullish CVD divergence over here, higher low in price, again a higher low in price, bullish CVD divergence, and also locally a bearish one. But what's interesting, and that's why I put this bearish one on the chart as well as this bullish one over here, is that it is from the same line. So you see a yellow and a blue line over here. And what I want to show you that's important as well is that over here we then have a lower high on the chart, right? We have a lower high on the CVD, lower high on the chart. It's absolutely minimal actually. On my AGGR chart, this high, funny enough, is higher. This is the first time I noticed that. I didn't know. But just imagine this high over here on the AGGR chart, just like on my regular chart over here, this high did not take this one. On my AGGR chart, it did happen, but let's imagine for now it didn't. Then what you then would see is a lower high on price, but a higher high on the blue line. Bearish CVD divergence over here. But then price moves down, and now the blue line is switching from a bearish CVD divergences between the highs to a bullish one between the lows. Higher low in price, but as you can see, a lower low on the CVD, and that is the same line. So we go on the same line from bearish to bullish CVD divergences, which is like a red sign for the bearish CVD divergence. It's like, okay, we went from absorption of longs to now absorption of shorts on the same line, meaning there's upwards pressure. And then you also had these bullish CVD divergences here, higher low in price, lower low in yellow, higher low again, lower low in blue. Now these have now played out as over here this high got taken. The probabilities then finally on the different scenarios is that, well, on a medium time frame we are looking for downside. That is the higher probability scenario from an Elliott Wave point of view. And on the micro micro, very locally for this wave 4, as mentioned, I would like to see this high being taken, I suppose, for a more like 3-wave structure, because in the end a wave 4 in a diagonal is still a 3-wave structure, and this looks like a first structure, maybe then a second, third, and eventually downside. So it could be a ranging weekend once again, and then a wave 4 for a diagonal, and then a move to the downside for a wave 5. If price moves up too high, reaches the trend line, it's invalidated, and we are gonna look for higher prices. Of course, that doesn't mean if we hit the trend line, we just go ups to the upside. You know, there's still resistance in this white box, my white target box here. That's why it's on the chart. So if the trend line is hit, you can also expect a move like this to happen in continuation, but it really depends on the reaction you get. But at the moment, from a probabilities point of view, this diagonal over here is a higher probability scenario, and that's why I show it in the video. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.